What is going on, investors? Happy Friday. Welcome back to the FAANG Stock Recap Show that we do here every Friday on the channel. Really appreciate you joining in. We're just going to jump right into it. We'll start with Facebook. They started the week around 274 and change. End of the week about at 279. Lots of news actually coming in from Facebook, and not from a good perspective. The DOJ is filing charges against Facebook for illegally favoring high-skilled immigrant workers over U.S. workers. So apparently there's some kind of law that requires companies to find qualified American workers to fill jobs before they give them to H-1B high-skilled visa workers. It looks like Facebook filled about 2,600 positions over the course of about a year that should or could have went to American workers instead of foreign workers. The DOJ is alleging this, but if you know anything about the government, it works a little bit differently. You're almost guilty until proven innocent in the eyes of the Department of Justice. I would actually expect Facebook to probably be guilty of this and likely face some kind of fine and also change their hiring practices going forward. Now, that's not the only thing. Up to 40 states plan to sue Facebook for antitrust next week. And this is a bipartisan group of states. Obviously, when you get 40 of them together, they're likely bipartisan, and it's led by the state of New York. And so this is not a Democrat or a Republican thing. Anybody that thinks that big tech is not going to be under siege because you have a Democrat in the White House potentially, it's not going to be the case. In fact, I actually think it's going to be the opposite, which is ironic because these companies tend to donate and tend to favor the Democrats. But I actually expect over the next 12, 24 months, really the next 4 years, heavy amount of regulation on Facebook, Google, probably Microsoft, Apple. All these companies are going to face it, and we'll see what happens. Again, I don't expect Mark Zuckerberg to be let off in handcuffs, but probably some fines that won't likely be tangible to the company to a certain degree, but maybe affect the stock price just slightly, although we saw this week didn't really impact the stock that much. Moving on to Apple, started the week at about $119, melted up to $122. Seems like a small move, but what's interesting is when we get over to the stock chart with Apple, interesting stuff going on there. Spoiler alert, you want to hang around for that. Now, the Apple bull case was raised to 191. That's the price target. We're at 122. Okay. So Morgan Stanley now says their bull case, which is kind of like their best case on strong smartphone survey data. So what Morgan Stanley did is they surveyed about 3,500 customers, and they raised their price target from 171 up to 191. That's because now their bull case on the iPhone shipments is at 268 million. That's up from about $213 million consensus. And you've got Morgan Stanley's strong bull case was at 240. So they went from 240 million shipments up to 268. The average selling price to 842, which was about 9% above. So after doing some surveys, Morgan Stanley sees, bullish action in Apple's iPhone. So that should be exciting to anybody that's a shareholder of Apple. Whether or not when and if it gets to 191, that would be great. Obviously, if you're a holder, we'll see what happens there. Moving on to Amazon, they started the week at 3,211, slid towards the end of the week, pulled forward probably a lot of this year's earnings with Amazon. They've had just an incredible year. Now, some interesting news. They're in exclusive talks to buy a podcasting Wondery, which is like a platform here. We've actually seen a lot of M&A in the podcasting space. You've seen Spotify be really active among others. So it looks like Amazon's jumping in there as well. Here's something that's interesting is Walmart Plus dropped their delivery minimum. It looked like you used to have to spend about $35 to get free either next day or 2-day shipping from the service. Well, they had to drop that to compete with Amazon Prime. So it just shows you the pressure that Amazon puts on their competitors like Walmart, who comes up with Walmart Plus. It's a great idea, likely probably a good service as well. But Amazon has such a stranglehold on the e-commerce business that it really puts a lot of pressure on their competitors. And this is evidence of that when they have to drop these delivery minimums, because it's just showing you that Walmart probably wasn't seeing the traction that they likely wanted to see there. Now, Netflix came in at about 487 in the beginning of the week, ticked up to 498. Again, when we get to the stock chart, Netflix is at a really key level. Now, what's interesting is this was already already announced, but customers will actually start to see it starting next month. A lot of customers, or many customers for Netflix, not all the plans went up, but the premium went from $16 to $18. There's some other plans that went up in price for Netflix. So customers will start seeing that price raise next month. We'll see if that impacts churn or anything like that. More than likely, the only thing it's going to impact is the bottom line of Netflix, because this is almost like the Costco model. Costco ups the price of its, service or its subscription every few years or so. And so whenever they do that, it's kind of a boon to Costco, because it just all flows to the bottom line, because most members or many members don't cancel and some new ones come in. I would expect the same thing to happen for Netflix. Google started the week at 1768, really had a nice week, ended the week at about 1823. Quite frankly, almost no news out on Google. Might be a good thing. When we get over the stock chart, more interesting stuff's going on there. Microsoft came in at $213, ended the week basically flat at $214. Some interesting stuff coming in from Microsoft. So Snowflake, I just posted a video actually on Snowflake, and boy, the stock rallied. I couldn't believe Snowflake. I mean, it sold off in the after hours and then just snapped back. Okay, so there's a lot of excitement, not just around Snowflake, but I think the market that they're playing in. And guess what? Microsoft is releasing a data tool that is basically a rival of Snowflake. So now, how much will this help Microsoft stock? I would guess very little, but it does probably take market share from other competitors like Snowflake and other ones that are out there. That's what makes it difficult when you have a competitor like Microsoft out there. They can just launch a tool and take some of your business. They're almost in the same seat that Amazon is in e-commerce and Apple is in with the smartphone. So just a great place to be, obviously, for Microsoft and its shareholders. Next stock we're talking about, of course, in final stock of the group is a Tesla. So started the week, actually pretty high, $595. Sold off a little bit, but then rallied hard up into the $600 range. These are basically all-time highs for Tesla. Interesting stuff when we get to the stock chart as well. Jim Chanos has been taking it on the Chanos. Over the last few years, he has been short Tesla, and he finally cuts his very painful short. He's absolutely been decimated by that short position, and Elon Musk has really stuck it to him. I tell you what, I ordered some of those Tesla shorts, and I still haven't got them. So we'll see when those come. That would be kind of nice to get at this point. Tesla opened, this is actually probably the biggest news out of all these companies of the week. Tesla opened to talks on auto merger if it was a good idea. I've thought about this, and I've talked about it with other investors kind of privately on the phone, or, maybe on chat rooms or whatever. And it'd be really interesting if Tesla bought, and I'm just going to throw out names here. I'm not saying that any of these would be a great idea or it will happen, but if they bought like Audi, or if they bought Mercedes, think about like a G500 that was like Tesla-fied and it was electric, or an S500 that was electrified, or an Audi A6 or A8 that was all electric. It would be really interesting. Or imagine if they bought something like Ford and then brought the whole Ford lineup to electric vehicle. It would be really interesting. Or an electric Corvette. You can just go down the line. Any combination here that Tesla, can acquire a company. They've got such a huge market cap, got, just access to lots of investor dollars because their share price and the shares are so expensive. They could raise money, they could borrow money, and they would get access to, development. They'd get access to production. They would get access, probably more importantly, to distribution, to, sales. So really interesting. We'll see what happens here, but this could be massive, massive news for Tesla shareholders going forward. Let's start things off here with the charts. We're going to take a look at Facebook. We're dancing up to, this is be a common theme here. We're dancing up to the top of the range. In fact, we kind of popped above here. Notice that I have this trend line here with Facebook at about 295. When we ticked over it here, the stock got rejected and sold off. We also saw it here. The stock, gapped up above 295 and then sold off. And in fact, sold off really rapidly, almost about $50 per share. Now we're at this level. So what's going to happen at these levels? And you see here, this is a high. This is a lower high. If this happens to not break this previous high, that would be somewhat bearish, and it's potential that we could come back down here to 270, and even more exciting if you're actually trying to acquire shares, maybe retest these lows back down at 250. So we'll see what happens here. Now, we are in a defined uptrend. This thing can literally go, in my opinion, this thing can go either way. This thing will either continue walking up. You'd like to see it retest these highs, which are about 297, 300, and then, maybe come back in here to the all-time highs. That would be a much more bullish scenario. If we don't get above this 285, 290, and this gets rejected down, that would be somewhat bearish, although our 50-day moving average is turning positive. In general, I'm probably more bearish this chart, but I would be cautious. I wouldn't necessarily be wanting to step in at these levels because this thing could get rejected. It could go either way. That's what's exciting about these. We're kind of consolidating in kind of a slightly upward pattern. So that's good. Obviously, I'm a holder of Facebook, so I'm not too concerned at the moment. Almost identical situation we're seeing with Apple here. Notice that we have this level here at we'll call this 120 just to make it a round number. Right at 120, when we gapped up above 120, we stayed there for a minute, and this stock came all the way back down to about $100. And then again, we gapped up, or we did gap up over 120, stayed there for a couple trading days, and came all the way back down to about 107. Same thing is happening now. Now our 50-day moving average has turned positive, so that's a little bit different, and we're up here at 120, 122. What's going to happen? Again, similar situation. This is a high, this is a lower high, this could potentially be a lower high. We'll see what happens next week. I would keep a close eye on Facebook and Apple, which are basically making the same formation. You'd like to see this push up above 125 by next week. If it doesn't, and it happens to get rejected down into these ranges, I would actually consider that a buying opportunity with Apple. Now, moving on to Amazon, didn't quite, as you see here, little bit different story. It hasn't got to the top of what we've marked out as a range here. You could probably bump this up just a little bit here. So I've got a level here. We'll just call it 3,300 just to give you guys round numbers. When we broke above 3,300, this stock sold off all the way down to 28.75, and then boom, we got up above 3,300 again, and then it sold off pretty rapidly down to about 29.50. Now, same thing here. We kind of peaked above it, sold off. Now, we haven't quite got there again. Now, we have a high, lower high, lower high. This could potentially be a lower high as well. Now, in the shorter term, we are in a nice, this is a nice trend here. I would actually expect, boy, it looks like to me, I know we haven't had a lot of action with these stocks. They've actually kind of traded sideways. I know we've kind of popped up above this, but I think we're getting to critical areas with Facebook, Apple, and Amazon. These stocks look like to me they want to pick one way or another. Are we going to come back up here and retest these highs, or is this downward trend going to be intact? Sellers going to step in, and then we create buying opportunities. In my opinion, any sell-off in these stocks is a buying opportunity, not an opportunity to sell them or to get out. So we'll see what happens, see which way these want to go. Obviously, I'm trying to accumulate more shares of these companies. I actually would like to see these break to the downside, but it wouldn't surprise me if they break to the upside. We have positive momentum in our 50-day moving average. It could go either way on these. It really depends on which way you're looking at these. So moving on to Netflix, similar story with Netflix. We have this upper end here, this 507 that we've marked out for a long time. I'm sure if you've been watching these videos for a while, it's the same story with Netflix. Anytime we've gotten up over 50, we'll call it 507, the stock has actually rallied really hard. And so that's why we're at an interesting spot here. Now, we came up to 507 and didn't rally here. We got rejected, came all the way down to the bottom of the range, which we have marked out at about 467. Again, came up here to 507, blew up, came all the way back down. Came up here, blew all the way down. So what are we going to do this time? So we're at 507 right now. We also kind of pump faked here. as well. This is an interesting one. If you want to trade this, you think it's going to pop here, that's possible. You could set your stop loss. This is not a bad trade setup, in my opinion. If you think that we're going to come up here to, we're at 500 right now, so we're about $7 away. You don't necessarily need to jump the gun on this one, but you can come up here. Any close or candle above this 507 has the potential to really rally hard all the way up into the 550s, maybe even close to 570s. Okay, now, and you could set a stop loss. I think you could set a stop loss here right at around 500. So you could, this is a really good risk reward. You can buy in at 507, put a stop loss maybe about $7 under that, and you have upside. You have like $70 upside in this one and like $7 downside, in my opinion. So, but make sure that stop loss is put in place. Now, any, sell off, if we get rejected at 507, that is certainly possible because you've seen it happened here, happened almost right here, and it happened here. Any sell off down to 467, quite frankly, in my opinion, is a buying opportunity for a Netflix. Moving on to Google, completely different story with this one. This one has actually done what Apple, Facebook, and Amazon could potentially do as soon as next week. It broke above its range. Now, it did it on earnings, and obviously we're still probably at least 30, 40, maybe even 60 days away from seeing earnings on any of these companies. So for them to break up would have to be maybe some broader market stuff, maybe some economic news, maybe some vaccine news, things like that could break all these stocks upwards, but we might have to wait until earnings to really see strong moves like we saw here with Google. Now, it is just way up here, kind of making its own thing. It's like, come fly with me, Michael Jordan. It is all the way up here. I wouldn't necessarily be excited about accumulating any shares of Google up at this range, but any pullback down to 1731, which is about $100 where the stock off is today, certainly would create a buying opportunity. We're actually creating a nice level, a lot of price action right here between 1730 and call it 1770. Any pullback into that area, in my opinion, probably would be a decent place to acquire some more Google shares. Next stock we're looking at is a Microsoft. So this one reminds me actually of Amazon in that we're still underneath this level that we've marked out at about 217. Okay, notice that we got over 217, stock sold off actually all the way down to below 200. Same thing here. We got up over 217, stock sold all the way off to under 200. And then same thing here. We got above 217. And the stock hasn't quite rallied off. Now, notice this was actually a little bit higher high than this one. So a little bit different setup than Amazon. This one actually looks pretty strong to me. Any pullback in Microsoft is, in my opinion, a buying opportunity. They just have loads of cash sitting on the balance sheet. They're going to do an acquisition, or they're going to deploy that at some point when they have the opportunity to do that. I don't know. It could be soon. It could be later. It could be quite a bit later. But they have plenty of cash on the balance sheet. They're going to deploy that at some point. It's not just going to sit there and expect some action from that soon. That could give the catalyst for this stock to go higher because earnings are typically, well in line with Microsoft. I know we have the Xbox this year, but again, that represents, I think, only about 10 to 15% of their total revenue. So it's something that could make it go up, but Microsoft is such a large company that even a 10%, 15% boost from a segment of their business like the Xbox, likely not to move the needle a ton, but we could see some merger and acquisition news kind of, soaring either Microsoft or creating a buying opportunity. In my opinion, any sell-off into the $200 range in Microsoft is a buying opportunity. And finally, our last stock, Tesla. This one looks a lot like Google. In fact, it looks even stronger. It is just still on an upward trend. It is just up here in its own airspace up here, just creating, newer highs. So it could be reaching some resistance here right at 600. It's probably a little bit psychological, right? You got a round number like 600. It looks like the stock is kind of hitting its head there. Any pullback into the $500 range, these previous highs, would, in my opinion, be the first chance where you could potentially come in here and buy some more shares of Tesla. But this one's just been on a monster run over the last few weeks. Honestly, not a whole lot to say here. If it breaks above 600, boy, the trend is just extraordinarily bullish, but this one will pull back at some point, okay? Because you just look at the chart of Tesla, it does have these, tendencies to have these monster runs and then have them retrace quite a bit. We see this one actually, the run started here at 275, went all the way to 500, but then came all the way back down to 330. And so I'm not saying that necessarily the same thing will happen here, but we've seen that this stock has rallies and pullbacks. So that in fact would be a healthy thing, in my opinion, for this stock to pull back at some point. Again, I'm looking at right around 505 would be a spot where if I wanted to buy shares of Tesla is where I first would look to step in on this one. So that's our FAANG stock recap. Hopefully you guys have a great weekend. We'll be back again soon with more videos. Good luck with all your investments.